$81,000 Bitcoin. Wall Street is moving on chain, and Washington just proved something critical. Even when the banking lobby pushed back, they didn't win. Because the stablecoin deal, it didn't change. Which means what we're watching right now isn't negotiation. It's the system being finalized. And while most people are still asking if crypto is back, the real shift is already happening underneath. This content is for informational and educational purposes only. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse, where we break down the biggest moves in crypto, macro, and markets without the noise. If you want to understand what's happening before it's obvious, make sure you're subscribed because you're in the right place. Bitcoin just hit $81,000, not spiked, not rejected, held. This isn't hype-driven price action. This is controlled expansion. At this level, sellers are getting absorbed, liquidity is consistent, and volatility is contained. That's not retail behavior. That's positioning. And historically, this phase doesn't last long. It transitions into acceleration. And while price is quietly expanding, policy is doing something even more important. It's catching up. Senators finalized stablecoin yield compromise in the Clarity Act. The key details: yield that resembles bank deposits is restricted, but yield itself is not banned. This is where most people misread the situation. They see restriction, but what this actually is, structured permission, because lawmakers had two competing pressures: protect banks and enable innovation. So instead of choosing one, they locked in both. And more importantly, this wasn't a draft. This was a finished compromise. But the moment that compromise became public, the reaction was immediate. Major banking groups responded, saying that the deal falls short. They wanted tighter restrictions and more aggressive limits on yield. This is the part most people miss, because this wasn't quiet lobbying. This was public resistance after the decision was already made. They tried to reopen the deal. And that tells you everything you need to know. This isn't about risk, it's about competition. Stablecoins with yield challenge deposits, savings products, and traditional financial control. So when banks say this isn't enough, what they really mean is, this still threatens us. And here's where the story shifts, because normally this is where policy bends. This time, it didn't. Lawmakers respond and hold the line. Quote, "We respectfully agree to disagree." This is the real signal, because this wasn't negotiation. This was a stress test. And the compromise passed. Think about the sequence. Banks pushed back publicly after the deal was finalized, and Washington did not move. That means the direction is set. And while that battle is being played out in the US, the rest of the world isn't waiting. Here we see a Moscow exchange launching crypto indexes for Sol, XRP, TRX, and BNB. This is infrastructure, not speculation. Indexes are how institutions track markets, allocate capital, and justify exposure. So this move signals crypto is being standardized globally, and not just Bitcoin, not just Ethereum, a full multi-asset ecosystem. And as global markets build access, Wall Street is building the rails. The DTCC is launching a tokenized securities platform with BlackRock, Goldman Sachs, Coinbase, and Circle involved. This isn't a test. This is infrastructure deployment. DTCC sits at the core of traditional finance. So when they move on chain, finance isn't adopting crypto. It's rebuilding on top of it. Tokenization fixes settlement delays, counterparty risk, and inefficiency. And when the biggest players align, that's not early stage. That's execution. But infrastructure alone isn't enough. You need regulatory clearance to activate it. And now, that piece just dropped. Securitized gets FINRA approval for tokenized IPO underwriting and custody. This is the unlock. Not discussion, not theory, approval. Which means tokenized equities are viable, institutions have a clear path, and capital can move in. This is where everything connects. Regulation meets infrastructure. So now, zoom out, because none of these moves exist in isolation. In one cycle, Bitcoin hits 81K, stablecoin rules finalized, banks push back and fail, Lawmakers hold the line, global markets build crypto indexes, Wall Street moves on-chain, and tokenized securities get approved. This is alignment, each layer locking in. Price expanding, regulation defined, resistance weakening, infrastructure deploying, and global markets integrating. This is construction. Most people are still asking, is crypto back? But the better question is the system already changing underneath us? Because now, the rules are forming, the rails are live, and the players are aligned. And the resistance, already tested, already absorbed. If you want to stay ahead of the shift, make sure you're subscribed, because we don't chase headlines. We decode what they mean before the market prices them in. The system isn't breaking, it's upgrading. And this time, it's happening on-chain. If you found value in this breakdown, hit the like button. And if you want to understand further what's going on in the markets right now, check out these videos here. Thanks for listening, and we'll catch you in the next one.